Alright, so there's really two ways to tackle this question of what's a good setup. The first is tackling it from your perspective or from the general trader perspective. And so a good setup from that perspective is going to be one that fits your specific trading methodology, whatever that happens to be. If it falls within your parameters of what you look for fundamentally, technically, or if you're only doing one or the other, that is what's going to be a good setup. So long as it checks off all the boxes on your list, that's going to be a good setup. And anything that doesn't check off all the boxes on your list is not going to be a good setup. Now, what's a good setup for me? Right? So I have my own system that I follow, that I've developed over the years of trading. I call it EAGLE. Right? And it's an acronym. It stands for Extraordinary Earnings, Sales, and or Projections. I'm looking to aim for high probability, high reward to low risk setups. The G is for growth. I want the price to be growing. I want the fund ownership to be growing. I want the industry to be growing and for it to be in a leading industry group. And the L is for leadership, so I want it to be a leader within its own group. And the last E is for environment. I want to be trading with the overall market. So if the overall market, the NASDAQ, the S&P 500, the Russell, the NYSE, the Dow, if they're all in an uptrend, then I want to be looking for trades that are also in an uptrend. If they're all in a downtrend, then that's when I'm going to short. I'm not going to be looking for shorts in an uptrend, and I'm not going to be looking for longs in a downtrend. So that's how I go about looking for the best setups. And then, when I'm filtering down, right? So that EAGLE system helps me filter the 10,000 stocks in the market down to about 100. Then from those 100, that's where I'm looking for that A, the A part of EAGLE, the aiming for the high probability, high reward to low risk trades. And so I'm looking for price patterns, right? So perhaps you may have heard of a few of them. Flat bases, flags, pennants, triangles, cup with handles, all those types, like those are all setups on my radar. And then what I'll do is I'll start from the top. So meaning I'm starting with the higher time frames. I'll go to the monthly charts. I'll go down to the weeklies. Then I'll go down and look at the dailies, see how things are consolidating there. Then I'll start to pinpoint my exact entry point down on the 2-hour chart for most of my trades. I tend to be more of a swing trader than anything else. But if I'm doing a day trade, then I'll go all the way down to the 5-minute chart. But I still want everything to line up on the monthlies or the weeklies, the dailies, and even those higher time frame on the intraday charts, right? So looking at the 2-hour, the 4-hour, making sure that those line up with what I'm seeing on the 5-minute, because when trades line up on multiple time frames, you're going to have more eyeballs looking at that trade. And so that's where you tend to get your more powerful moves. So if things line up across multiple time frames, that's what you want to aim for.